Welcome to our discussion on the Direxion Daily S&P 500 Bull 3X Shares ETF, also known as SPXL. This ETF is designed to provide investors with 3 times the daily performance of the S&P 500 index. In other words, if the S&P 500 index goes up by 1% in a day, SPXL is expected to go up by 3%. However, it's important to note that this ETF is geared toward short-term trading and is not meant for long-term investment. What is the S&P 500 index? The S&P 500 index is a market capitalization weighted index that represents the performance of 500 large-cap stocks listed on the New York Stock Exchange and the NASDAQ. It's often considered a benchmark for the overall performance of the U.S. stock market. The index is calculated by Standard & Poor's, a financial services company that is a division of McGraw Hill Financial. How does SPXL track the S&P 500 index? SPXL uses financial instruments called futures contracts to track the performance of the S&P 500 index. A futures contract is a legally binding agreement to buy or sell a financial asset at a predetermined price on a future date. In the case of SPXL, the ETF uses S&P 500 index futures contracts to replicate the performance of the index. However, it's important to note that futures contracts are leveraged instruments, which means that they allow investors to trade with more money than they have in their account. This is what allows SPXL to provide 3 times the daily performance of the S&P 500 index. What are the risks of investing in SPXL? As with any investment, there are risks involved with investing in SPXL. The first risk is the inherent risk of the stock market. The stock market can go up or down on any given day, and there is no guarantee that you will make money by investing in SPXL. The second risk is the leveraged nature of the ETF. Because SPXL uses futures contracts to provide 3 times the daily performance of the S&P 500 index, it can magnify both gains and losses. This means that if the S&P 500 index goes down by 1% in a day, SPXL could go down by 3%. This can be particularly risky for investors who don't fully understand the leverage involved with the ETF. The third risk is the potential for volatility in the stock market. Because SPXL is designed for short-term trading, it can be more volatile than a long-term investment. This means that the value of the ETF could fluctuate significantly in a short period of time, which could lead to substantial losses for investors. Who should consider investing in SPXL? SPXL is not suitable for everyone. It's important to understand that this ETF is geared toward short-term trading and is not meant for long-term investment. It is best suited for investors who are comfortable with the risks involved and have a high risk tolerance. Additionally, investors should be well versed in the stock market and understand the mechanics of leveraged instruments before considering investing in SPXL. This ETF is not suitable for inexperienced investors or those who are not comfortable with the risks involved. In conclusion, the Direxion Daily S&P 500 Bull 3X Shares ETF, also known as SPXL, is a leveraged ETF that tracks the performance of the S&P 500 index. It is designed to provide investors with 3 times the daily performance of the index, but it carries inherent risks due to its leveraged nature and the volatility of the stock market.